It's our call of the day, and we bumped the call of the day all the way up for obvious reasons. Too neutral from buy. Price target goes to 250. This is at UBS from buy. And it's about Azure, and it's about the slowing growth engine. One of the principal reasons why people were willing to pay a higher multiple than historically averaged for Microsoft because of that growth in the cloud. What do you think?
So what I think is that if you have high conviction in a stock, if you have a belief that you're owning a stock because it's going to provide you a conservative allocation towards a select group of stocks that you think potentially could have a recovery, the best thing that can happen is that expectations get lowered. And that's exactly what happened here. So I feel even better about it. I feel better about the fact that we're marking down what we believe the earnings growth for the most significant component of the business, the component of the business where the growth and the revenue appreciation has been catalyzed over the last several years, and obviously that's Azure. So I feel great about it. I like lowering expectations. It does not change my view at all. This is the most diversified mega cap. The NASDAQ is 4% above its October low. The NASDAQ is going to take out its October low at some point. And in that type of environment, I want to own Microsoft above the other mega caps.
So it doesn't make you in any way reconsider whether that stock is going to do well enough in a universe of stocks to be a better performer for a stock summit pick.
Listen, I'm not being glib in this remark. I've been doing this 30 years. If you're going to sit there and you're going to have a analyst downgrade come out and you're going to change your view on something that you had such high conviction about one day before, you really shouldn't be doing this. So, sorry, no.
I think that's a fair and I think that's a good answer. Jim, you own Microsoft, right? What do you make of his pick, and what do you make of this news?
I own very little of it. I own about 2.5%, which is well below 1/2 of the market weighting. And the reason that I own it comes under portfolio management, right? There are going to be times, and after today might be one of those times where technology catches a bid, mega cap catches a bid, but I don't think that's going to be the theme of the year. I think the theme of the year is going to be more average stocks get a bid and more cyclical stocks get a bid. That said, portfolio management, I don't want to be totally out of this. So I'm underweight Microsoft. I'm underweight tech in general. I think it will do fine. I think, to Joe's point, this isn't like Azure is broken. It isn't like the company's broken. Maybe they do have a bad quarter with Azure. I don't know, but I think that Azure over the years to come is going to do just fine. I just think that at this multiple, 24 times, it's still expensive. I can't get really enthusiastic about it because of that multiple. It's just that simple.
Jenny.
There's a really important word in this downgrade, and it's maturation. And we need to think of that and apply it to the broader kind of FANG plus Microsoft complex. So when we look at these, and to your point, Jim, it's not a cheap valuation. It's trading at 24 times. A lot of these stocks are still kind of rich. And we need to acknowledge the fact that they have been maturing, and I think now are kind of entering a mature phase. When we think about predictions, because we're at the beginning of the year, I'd bet you we sit here in 10 years and we look back and we kind of look at these companies not as these wonderful high growth tech stocks, but as kind of industrials or utilities. And you know what? When you have that kind of maturity, you don't get a 24 times multiple. And so I think that we collectively as investors need to re-rate the multiples that we're willing to give them, given the maturity that's within this whole complex.
Kara, you own it too.
Yeah, I own it. We're not overweight Microsoft, but very few people are overweight Microsoft and Apple. Remember that, because there's such big weights in the S&P. And if you look at what's happened with growth stocks, and it's Apple, Microsoft, Google, Netflix, Amazon, FANGs, plus other names, those stocks mostly have been hit extremely hard. Microsoft is the last one to have been hit very hard. It held up the longest, and I think even though the multiple has gone from 32 to, I would say it's 22 times forward earnings, it's still higher than many of the names in the category. Meta is 14 times. And you can't hold on to that for long in this market environment without giving up some more. Right. I think it'll settle down, and it could be back on a list of people who want to buy stocks that are growing above the S&P rate It's a great company, great balance sheet, but it's being hit on the multiple side because that's what's happened to all of them.
Well, maybe it's going to, as long as the Fed remains aggressive, isn't it likely that that continues?